Okay, everyone, I hope you're having a great time. You are welcome again. Now, from our previous video, part 1, while we are following this SMC with AMD confluence strategy, the content we have done recommended trading time frame, and then we have also done recap of SMC market structure. So today we'll be looking at part 2, which is going to cover point 3, point 4, and point 5. So you may ask, what is the recommended time to trade and apply our entry? When do we trade? When do we begin to mark out our market structure? When do we begin to observe and look for entry? It is mostly recommended to do that during London and New York session. Okay, so the London and New York session on TradingView, the indicator comes as a pre-installed, as you can put it there. But if you want to put it manually, if you want to use it for any other, like Derive, you want to use it for Derive or any platform that is not TradingView, you can easily mark it out. That particular day, today now is on the 7th, and this particular one I'm talking about is mostly for Nigeria time zone. Okay, so using the indicator on your TradingView, then in whatever country you are, you can easily get it. Okay, so from 1 a.m. till 7 a.m. that is for Asian session. Then for London session is from 8 a.m. to 12 p.m. That's Nigeria time now. So if you are not from Nigeria, I will show you how you can easily get it also. Now, New York session in Nigeria timing start from 1 p.m. to 5 p.m. So if you want to mark it out on any other platform that is not TradingView, or like for Derive TradingView, you can just use this type of bars and the colors to mark them out and differentiate them. Okay, so how do you bring it out on the main TradingView? You can easily see it on your TradingView when you click on this place on your TradingView, this part that is labeled FS. Okay, when you click on it, it will pop out. Then you can search for it. So what's the name? The particular one I recommend using is this one right here, called FS Asian Session Range. Hope you can see it. Asian Session Range by Rob Minty. So how do you search for it if you don't have it already? Because I've already put it on my favorite. You just click on Asian FSN, FSN. You see it, it will pop out. So when it pop out, you just have to select, put it on your favorite, and then when you have selected it, it will show up here at your left hand side on your TradingView. When it shows, you just click on the settings. When you click on the settings, it will pop out also. In the input section, what do? You just scroll down. Everything here will be marked. Okay, everything here will be marked, but you have to unmark the box. You have to unmark them, unmark everything. Only leave this one. This show New York session bar, and then show London session bar. Okay, boss, show London session boss. You leave those ones, you don't touch them. Come to the style. When you come to the style, you see everything here. You unmarked everything also that is here. Unmark everything. Then you just have to leave whatever is there again. So for it to be transparent on your TradingView, the background, based on the type of color of TradingView, the background I'm using, based on the color of the background I'm using, I have to increase the intensity of the these three colors. So what did I do? I just have to click on the colors. It will pop out. This is for the London and New York session. It will be around 10 or 12 thereabout. So I have to shift it to 20. Type it there, 20%. It's the same thing for the London session and Asian session also. So when that is done, you can see that this is the Asian session, London session, and the New York session. Okay, using this vertical line, you can see that line that I put there. When this started, which is around what our Nigeria timing, 1 o'clock, because my TradingView is following my local time. Okay, this is 1 o'clock in the morning. You can see that when it now ends, it was around 7 o'clock in the morning, like I have explained before, using the manual pattern. So when you drag it again, you can see 8 o'clock in the morning. Drag it again, you can see 12 p.m. in the afternoon. Then when you drag it again, this everything, you remember that everything we are doing on the 15 minutes time frame. So always take note of your time frame, 15 minutes time frame. Then when you drag it again, you can see that this started around 1 p.m. and then it's going to end around what, 5 p.m. Nigeria time. So if you put it on your own country time frame, you should be able to see it and know how to apply it accordingly. So now that we have understood how to put the AMD session indicator, which is on the trading view, and also how to apply it manually, let's try to understand it. It's all about, when you are marking the structure of the market, you can see that this is just showing ranging, which is price is not taking inducement, it's not taking the high point, it's just ranging. When price is ranging, that is called what, Asian session range, and you can easily observe that during 1 a.m. to 7 a.m. Nigeria time. Okay, that is called accumulation. Then when price now go out of that range and then begin to push upward, this is called what, manipulation, and we can say that is for what, London session. Okay, London session is mostly used for manipulation. You can see that it is during London session that this price went outside this full boss. Okay, then it went up again. When it went outside this boss, many people will be selling, because majorly they don't understand market structure. That's why you need to understand SMC market structure before you can apply this session trading effectively. Okay, and we are not just using it blindly just to add more confluence to our already understood smart money concept section. Okay, so after price have taken out, done manipulation, making you able to sell, price go up again. After this move, London session move, price can come down again and continue to go up. So I will explain this very well when we get to the entry models. You can see this is just what price might actually do. We have to identify first of all our inducement, which is already here. We have identified our inducement. Okay, after that, break of structure, giving us the fact that this market is an uptrend market. But when we see that market is making this type of movement, which is price is not taking out this high point, but finally when price took out the high point during Asian session, that is when price did that. Then during London session, price took out this low point, which is not serving as our what, inducement. Then price made this type of move, giving us a break of structure, leaving another inducement here. Then during New York session, another block is there. We can also do what, and take it accordingly. You understand this very much when we get to our entry. You can see that this type of structure is called what, is majorly for structure type 1, because it only involves inducement. It only involves inducement. That's after break of structure. It only has inducement and then what, another block, and nothing more. All right, so let's come to our entry modules or model. So the entry modules or entry models, there are 3. Okay, there are 3 in numbers, but I'm just going to give out 2 that mostly come out a lot, that mostly you can easily see on the market. Then the other last one is reserved only for my VIP members. Okay, so I'm not trying to say you must subscribe for VIP, is a must, all of that. No, with all this I'm giving out free content. There's something that I've paid for heavily with my money, experience, all of those. I'm just trying to help the trading community so that we can be profitable. So now the number 1 out of those 3 modules is called what, order block. And order block can come in various form. OB, they can come in various form, OB, DOB, and EOB. And we know what is OB, order block. That's after price give us this type of structure, whereby we have inducement, break of structure, inducement again, just another block here, and nothing more. Just only one pullback after break of structure. Okay, so price give us what, another block. Then we have DOB, decisional order block. If you have been following my market structure mapping with SMC, you should know this by now. After price give us, in this is market structure type 2. Okay, this is type 1, and then this is type 2. After price takeout inducement, break of structure, first pullback, second pullback, it can give us a lot of series of pullback. But the first pullback that price is going to take out is going to refer what as our inducement. After that, we have our decision order block. In my VIP membership, there's a lot of patterns we can use to enter market price, to enter the market when price gets to decision order block. Okay, because it's very dangerous to just enter the market directly from decision order block. It's just 50-50. It doesn't have high probability of playing out. Okay, so in the then the last order block here was now referred to as our EOB, called what? Extreme order block. Okay, so I hope this is very understandable, because it's just what you have known before from our market structure mapping. Okay, so when can we use this type of structure? If it happens, when can we use it, and when can we use it? Because now we'll be trading just London and New York session. So order block, decision order block, or extreme order block, it mostly play out a lot, as in has high probability of winning trade when we apply them just during New York session. Sometimes price can also give us this type of structure during London session. Okay, but when you see this type of structure during the New York session, is very, very, very most effective. Okay, when you see that price has already given us maybe up to this point price take inducement, then you now see that this is another block, and that other block has not been mitigated during and time is now during New York session. You can just confidently enter your trade here and set your take profit at this high point, and then if it plays out, good. If it doesn't play out, you are following the strategy, because it is going to play out a lot of the time. The same thing applies to this. Maybe price is just ranging all year during London and during Asian and London session. Then during New York session, you now see that this other block price is coming to it, because price has not mitigated it. This will give you confidence that when you enter the trade here, price will likely go up and then go to your take profit, or come down if you are doing selling. But all the scenario I'm using here is just for buying market. Okay, now let's look at our entry model type 2. Type 2 entry model or model is called what? Liquidity. And liquidity can come in different form. Liquidity can happen when price take out inducement. Okay, liquidity can also happen when price did what? Do market structure sweep. The whole market structure, price just sweep it. Let me try to explain what I mean by that. This is the market. Then maybe during, after price has given this range, price took out the range, and then this range is not serving, this pullback is serving as our what? Inducement. Then maybe during the inducement point, price give us our liquidity entry. We can take it, because liquidity mostly is for London session. So if price give us that, we can take it. Then price can also do something like this. Instead of price to give us entry here, price can come to this main structure, because this is the low point. This is the high point and the low point, the high point after price has taken out inducement, right? Then price is coming now to this major structure low point after price has taken out the low and give us our liquidity entry. What do? We enter the market joyfully, because we are following our strategy. Okay, so when you see this type of entry module after marking out your market structure, and then you are not trading during Asian session, then London session, when London session happens, price can take out inducement and give us what? If you are buying, it is going to be Morningstar. And then Morningstar candlestick pattern for buying is what? Is this type of structure whereby we have the first candlestick, then the second candlestick, this middle candlestick is this smallest one, then the third candlestick is almost the size of the first candlestick. The white, you can see and identify with the color there as with white, green, and green. So the first candlestick white, you can see the second candlestick is just like 50% of the previous candlestick. So it is the wick of this middle candlestick now that now sweep either inducement point or what, or the major structure the major market structure, like price just coming like this, then price takeout inducement. After price takeout inducement, it give us money star candlestick pattern. Okay, we can enter accordingly, because during London session, if price give you money star candlestick pattern for buying market, you buy it confidently because it has high probability of playing out. Then this is the low point of the market, right? If price now comes and then after taking out inducement, maybe nothing happens or fail the price action, what do we do? When price comes to this major structure point, the low point of the structure, if you are buying, price can give us money star candlestick pattern also when the low point is not swept. Okay, so we can enter using money star candlestick pattern. Then if price is selling, you know that price is selling, and then price come to inducement, give us our evening star candlestick pattern, we enter it. Then what of if price come to this high point, take out the major structure high point, give us our evening star candlestick pattern, we can also do what? Sell. Then the last model is called what? Institutional funding candle. That's, we are still looking at liquidity. All this is just liquidity. Money star candlestick pattern, if it happens, liquidity. Evening star candlestick pattern, liquidity. Then the third one that we may see is what? IFC. IFC, institutional funding candlestick, for buying and selling. For buying, you see that this middle candlestick, it will just sweep out the liquidity either from inducement point, right? Then it can also happen at market structure low point after price take it out. Then the same thing for selling this type of structure. All that is very understanding. So what I'm trying to say is the previous candlestick may just be something like this. It may not appear like a morning star or evening star. Since we are buying, so it's for morning star candlestick pattern, this type of pattern, but we may not see this type of candlestick there. The first candlestick, you may not see it, or it will be very small, just like with wick. But when institutional funding candle happens, how do you know it? See this candlestick, the body is very, very small. Then the wick also is long, but at the top of the wick, at the top of the candlestick, you can see that there's little to no candlestick at the top. That's when you are buying, okay, with institutional funding candlestick. What you have to do is wait for the next candlestick to close above it. After price close above it, you have more confidence to enter your trade here and put your stop loss below. Okay, so the same thing applies for the selling model. After price has taken out this either inducement point or major structure high point or low point, but in this situation, after price has taken out the major structure high point, then we can see that price give us this our institutional funding candlestick. What we expect next is the next candlestick to close below it, then we enter our trade and then enter directly like that. Okay, these are the entry models and all modules to use to apply with trading this our SMC with AMD confluence. I hope this is very helpful. Watch this video again, practice, and I hope you will find benefit with it.